Welcome back to Alpha Recap, your aftermarket wrap of the biggest stories driving stocks. We're closing the books on today's session and unpacking what moved markets, why it mattered, and what analysts are watching next. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Lots to get through. Big moves in semiconductors, an intriguing tokenization milestone, some mixed guidance in pharma, and a macro thread about gasoline that's already biting consumer wallets. So, what really stands out here is the extent to which AI and data centers dominated the tape.
Totally. The headline today was the AI and data center theme driving re-ratings across chipmakers and infrastructure names. AMD jumped about 20% after a quarter where revenue and guidance beat expectations. And Intel rose roughly 13% to about $108 on exceptionally heavy volume, nearly 190 million shares traded. Samsung surged more than 15% and pushed past a $1 trillion market valuation after a huge jump in first-quarter operating profit.
Yeah, that tracks. Analysts were essentially reading those moves as evidence that AI-related data center spending is accelerating. I mean, when you step back and look at this, AI workloads are heavier on compute and memory than traditional cloud tasks. So the math for high-performance chips looks different this cycle.
Beyond semis, there were some interesting corporate beats that reinforced pockets of strength. Disney reported non-GAAP earnings per share of $1.57 and revenue of about $25 billion, which beat estimates. Fortinet had a favorable reaction that some analysts are framing as evidence it can adapt to AI-driven security demands. Restaurant Brands International topped numbers too. Burger King US comps were up about 5.8%. And Uber rallied roughly 8 to 10% after management issued bookings guidance above the street, despite taking a $1.5 billion revaluation hit to net income.
Honestly, I was a bit surprised by how much the market shrugged at the Uber charge. The rally suggests analysts and traders prioritize forward-looking bookings momentum over the accounting hit, which is a classic example of markets focusing on operational metrics rather than headline net income swing.
Right. And in healthcare, Novo Nordisk said the Wegovy pill had the fastest take-up in weight loss drug history. Yet management only nudged guidance higher and still flagged expected profit and sales declines for the year. That created this tension. Adoption is strong, but near-term metrics and cadence are being described with a cautious tone.
Which highlights a recurring theme we saw. Earnings quality and narrative resilience mattered just as much as whether a number beat or missed. Beats give you hard data to feed into models. But when guidance is cautious, analysts will split on how persistent growth will be.
Two cross-market developments deserve special mention. First, JP Morgan's Connexus unit executed what was described as the first near-real-time cross-border redemption of a tokenized U.S. Treasury fund, working with partners including MasterCard, Ripple, and Ondo Finance. Second, a New York Fed study underscored that rising gasoline prices are pinching lower-income households. Regional averages moved above $4, and in some areas near $4.48.
Big move.
Let's pause on tokenization because that's the kind of thing that could have structural impacts over time. Tokenization converts ownership of an asset into a chain-based digital token that can transfer near instantly between custodial parties. In practical terms, that could shorten settlement windows and reduce counterparty settlement risk for certain short-term instruments.
Right, and to add to that, tokenized treasuries could enable faster cross-border liquidity flows. But analysts stress the operational and legal wrinkles. Custody standards, legal frameworks, and integration with existing repo and settlement systems will determine whether this remains a niche pilot or becomes broadly useful.
There's a fair debate about durability here. On one hand, the data center cycle is clearly re-rating chip names. AMD was up about 20%, Intel roughly 13%, Samsung more than 15%. On the other hand, skeptics point out a lot of the moves could reflect momentum and multiple expansion rather than a sustained margin change. Inventory cycles and CapEx timing at cloud providers matter a lot for how long these gains persist.
Exactly. Data suggests cloud providers are accelerating build-outs for AI compute, but that's a lumpy, energy-intensive process. That's why Microsoft reportedly weighing a delay in an energy commitment while expanding data centers is so notable. Growth versus sustainability trade-offs are real.
A quick explainer for listeners. Operating leverage was a key concept behind the Uber reaction. Essentially, it means fixed costs exist in a business. So when revenue grows, each incremental sale drops mostly to the bottom line and margins expand. If bookings growth holds, operating leverage can turn revenue gains into outsized profit gains. But that $1.5 billion revaluation was a reminder to separate recurring economics from transitory accounting items.
And that separation is exactly what modelers should be doing, filtering out one-offs and focusing on core metrics like bookings, same-store sales, device shipments, and so on.
Let's run through where coverage diverged today. First, sustainability of the AI-driven multiple expansion. Proponents see a structural growth trajectory. Skeptics warn to watch margins, CapEx timing, and inventories. Second, cybersecurity. Fortinet's strong reaction was framed by some as proof AI can be an accelerator for security vendors, while others say AI could commoditize certain detection tasks and shake up incumbents.
Then you have Novo Nordisk, where clinical demand for Wegovy is booming, but conservative guidance created two camps. One that adoption momentum is undeniable, and another that near-term supply, pricing, or accounting cadence will mute financials for a spell.
And back to tokenization. Technologists and some market participants hailed the milestone, but skeptics pointed out regulatory, custody, and interoperability frictions that could slow institutional adoption. So, a big step, but not necessarily a broad market reshaper overnight.
Short reaction.
Let's talk implications for different investor types. And we'll be clear here. Analysts note these are implications and not advice. For short-term traders, the tape offered high beta setups in AI hardware and breakout candidates. Apple, Nvidia, and Broadcom were on watch lists as the Nasdaq probed new highs. That means heavier volatility and sensitivity to flows and news.
Growth investors got fresh inputs from beats at AMD, Disney, restaurant brands, and LivaNova. But they should be careful to separate recurring performance from one-time items, like that Uber charge. Data center exposure is increasingly central to growth cases for semis and cloud suppliers.
For income and value investors, sector rotation into high-flying tech can create selective value opportunities elsewhere. And the tokenization work has implications for custody and short-term liquidity, which income portfolios will want to monitor from an operational risk perspective.
ESG-focused and governance-sensitive investors were given fresh issues too. Microsoft's potential delay on an energy commitment as it scales data centers and governance debates around AI product rollouts like Meta's multi-mark raise reputational questions.
Macro-oriented investors should note the New York Fed finding. Rising gasoline is already causing lower-income households to cut driving and discretionary spending. That intersects directly with retail and services exposure. Regional averages above $4 and some near $4.48 are meaningful for consumer behavior.
Short reaction.
Strategic considerations and a short watch list. Watch guidance and CapEx cadence closely. Today's rallies leaned on forward guidance. Separate operational momentum from one-offs when updating models. Monitor tokenization adoption milestones and regulatory signals. Keep an eye on energy and ESG trade-offs at cloud leaders. And watch consumer stress indicators tied to gasoline and regional cost pressures.
To add, analysts note the short-term looked momentum-driven after today. For longer horizons, fundamentals around CapEx cycles, energy costs, and regulatory and operational adoption will determine winners and losers. So resist the temptation to draw permanent conclusions from one day of big moves.
Key takeaways, quick and clear. 1. AI and data center demand materially influenced the market today, driving big moves in semiconductors and related infrastructure. 2. Earnings beats mattered, but guidance and one-time items created a lot of nuance. 3. Tokenization took a meaningful technical step, but broad adoption remains conditional on legal and custodial frameworks. 4. Rising gasoline prices are a real consumer headwind that could affect discretionary spending in the months ahead.
Final thought. Analysts note momentum was powerful, but for investors thinking longer term, it's the CapEx cycle, energy constraints, and regulatory developments that will ultimately separate transient winners from enduring ones.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks. See you next time, and don't forget you can submit your questions at stockalpha.ai.